So what does this say for the setup for 2026? Let's ask Sonders. She's a chief investment strategist at Charles Schwab, here with us.
Hi.
On set.
Happy New Year.
It's great to see you. So much to discuss. I mean, the Venezuela situation is such a mega geopolitical one. The market today is telling you it's way more focused on the AI trade and the memory pricing data out of Korea. What are you focused on?
Well, there's a long history of geopolitical events, and unless they turn into truly protracted military events that have a lasting impact through the energy channels, it doesn't tend to have much of an impact on markets. So to not see any kind of knee-jerk reaction was not a surprise.
Does anyone need to go out on a limb, though, and say, you know, energy's down to 3% of the S&P 500. It's time for it to make a big move higher. Or do you even spend any time thinking about that when you're putting together your outlook?
I think we have the energy sector as a kind of a neutral or market perform. So I think it's probably too late to be significantly underweight this sector. We weren't considering putting it to an outperform simply because of Venezuela. You know, we've got the economics problem associated with where oil prices are and probably the lack of clamoring on the part of even some of the major producers to go in there because of the economics. And we're massively oversupplied globally. So that's going to be interesting to see whether the sort of fruits of that labor are going to be applied here in any meaningful fashion and in the short term.
Well, you've got many Democrats, some of whom, by the way, who called for Maduro's removal are now angry that Trump had Maduro removed. Whatever. I only bring that up not because it's a political show, but because it's a midterm election this year. Yeah. And I believe Sonders' own data shows that in the midterm election year of a four-year cycle, which is this year, markets are subject to wider swings, probably in part because people are jumpy and they don't know which way Congress is going to turn.
Yeah, so of the 4 years of a election cycle, using calendar year terms. And anytime I mention this, I hear people say you should do it from election day to election day or inauguration day to inauguration day. That's not really
Everybody
the
has
point.
An opinion.
It's just
You've been on Twitter?
Yes, I'm on Twitter. I'm on Twitter. It has the lowest win rate of the 4 years. And you do have some common thread of sort of the violently flat pattern. So bigger swings around a generally flat. That said,
that's a great term.
We buck this stuff all the time. You know, the pre-midterm year, the post-election year, which was 2025, did not fall in line with historical averages. So
what's a historical average for that year?
I don't know what the percentage change is, but positive. But okay. We were well ahead of that, given what markets did.
I mean, we've done so well for so long here. I don't know if any of the traditional patterns apply, right? Or if you just have to say squarely focus on something like the AI trade or the fact that interest rates are falling, which we don't talk enough about.
Speaking of the AI trade, it's been a bit of a tale of two markets. You can talk about the market and then focus on cap-weighted indexes like the S&P 500. The fuller story is tunneled under the surface of the indexes. Even since the April 8th closing low, you had bear market level maximum drawdowns at the average member level. So there's a lot more churn and rotation under the surface, which you didn't pick up if you were just focused on cap-weighted returns. I think 2026 might be a bit more of a shift where there's less of a sort of unifocus on these cohorts like the Magnificent Seven and a broadening out in terms of where opportunities lie and where investors are looking.